All right. Good morning, ladies and gentlemen. And it is time for another excellent webinar experience. Of course, brought to you by FX Street. My name is Walker England. I am an instructor of education here at Fxcm and dailyfx.com. And I have been invited to speak to you about scalping. Yes, scalping going to be the subject of the day. And over the course of the next hour, I want to delve a little bit into strategy. And ultimately, I want you to leave here with a better understanding of how you can use pivot points with an active trading strategy. Now, I've got a lot to talk about. We have some great charts and some great movements on our graphs after this recent US ADP announcement. You may even see the euro dollar chart on our screen. Now, very quickly, before we get started, I just want to make sure that everybody is aware of the chat box. You'll see it pop up inside of your WebEx browser. This is how you can communicate with yours truly throughout the duration of the program. I want to take as many questions, concerns, and look at as many charts as possible. So be sure to queue those up, and I will get to those as time allows. Now, down to the good stuff. I know we can take some quick polls here. I don't know if we have time for one now, but I want to see how you are trading. Ladies and gentlemen, as scalpers, normally we fall into three distinct categories. We either find ourselves being range traders, looking for entries between levels of support and resistance, or we'll find ourselves as breakout traders, finding ourselves, again, looking at support and resistance, but in different lights to find price exceed or break below those values. Last but not least, we'll find that trend trading is going to be a great way to trade momentum and scalping. One of those ways to trade trends is going to be through a retracement, which all comes back down to finding a pullback against the trend where we can see price bounce off of a key level of support and resistance so we can enter in on side of momentum. Now, regardless of where you fall, whether you're a trend trader, range trader, or trend trader, one thing is going to be certain. We need to establish some key values on where to enter onto our charts. And that's what technical analysis is all about, establishing these key price levels up our graph and utilizing them to our advantage. Now, I'm sure a lot of you are familiar with price action. One way I like to start off scalping is just by working from left to right on my chart and seeing the direction of price. And on the euro dollar here again, we see that price has progressively made a series of higher highs. Now, this is good. This is going to be helpful for our trend-based bias because now I know price is looking to push up towards higher highs. If I fall into that trend trading category, I may look for opportunities to buy. Conversely, if I fall into a breakout strategy, I may also want to look for an available area to go ahead and trade a breakout again to a fresh higher high, which begs the question, how do I identify key levels of support and resistance on a day in and day out basis? And our answer here today for our webinar is going to be through camarilla pivot points. Now, again, if you have a moment, use that chat box. Let me know if you're already familiar with pivot points. I know a lot of you out there using the classic pivots, but today we're going to mix things up a bit, and I'm going to be using a camarilla pivot. Now, the calculation is going to be slightly different, but I find that it's going to be beneficial for day trading, and I will show you exactly why here momentarily. I just want to make sure that everybody has the parameters correct on the graph so we're all looking at the same thing. Looking at camarilla pivots, and I'm looking at a time frame of D1. What this means to me is once I click OK, I'm going to get one set of pivot lines per trading day. Now, at most brokers, and here at Fxcm, you'll see one trading day in Forex is going to constitute 24 hours of trading between 5 p.m. Eastern Standard Time to 5 p.m. Eastern Standard Time. This is when we began right at 1700 ET. It will roll all the way through, again, where we'll have a new set of calculations to develop a new set of points. Now, down to the good stuff. Camarilla pivot points, once we have them uploaded, Very easy to read and very easy to decipher. And I see a few of you not familiar with pivot points. That's okay. All we're looking at is the previous day's trading range. Again, we're taking yesterday's information. We're multiplying it out by a fraction to have these key levels of support and resistance updated on our chart. Resistance, going to be very easy to find. They're going to be our green lines up above. And let me just go ahead and label that. It's going to be a resistance line. And this is going to act as our price ceiling. Now, these price ceilings, I like to think of them exactly as that. If you're at home, if you're by yourself, hey, it doesn't matter. Just take a moment, listen to the webinar, but stare up at the ceiling. This is exactly what our green lines are going to represent, a ceiling. It's what's holding us inside of the room that we're in. It's keeping us outside from the elements. Again, a little bit raining here in Dallas, but you'll see as long as that's intact, we reasonably assume that price is going to meander back down the graph. Conversely, we have a key level of support. These are going to be our red lines. Support going to be listed in red, support 1 through 4. These are like the areas of floor of price. Now, again, we can use the example. We can stare down below our feet, if you will, and the floor is what's holding me up as I sit here in my desk chair speaking to you live. Now, if that floor was to fall out, that would be considered a breakout. I may find myself on the lower floor of the building. We'll talk about that here in just a few minutes as we begin to move on with our strategy component. Now, for those of you that are using the classic pivots, let me just go ahead and do a quick Pepsi taste test challenge for you and put these side to side and show you why I choose camarilla pivots over classic pivots for day trading. It just comes down to the amount of information available for me to trade. Notice when I go ahead and queue up my classic pivots, and allow me just a moment to widen out some of these lines here so we can see the difference between the two. Now, we'll find that the classic pivot's going to be further away from price. And if I click OK, we'll see our thick lines are going to represent our classic pivots, where our thin lines are going to represent our camarilla pivots. Notice which ones are going to be hugging closer to price and become more relevant as we look to scalp and day trade the market. For me, I have to say cam pivots are going to be the better value when it comes to support and resistance. Now, that's not to say that you can't use one or the other. Again, it's personal preference, but I always like to take a look between S4 and R4 on our cam pivots. The distance between those two values going to be just about 50 pips. Now, if I look at my classic pivots and I measure between S4 to R4, the distance is going to be approximately 290 pips. Now, in regards to relevance, certainly the euro has the potential to move 290 pips, but in my 9 years of experience in Forex, I would say those days are going to be fewer and farther between, because the average move on the euro dollar from low to high is just a shade over 100 pips, which makes my smaller band of pivot points more relevant as a key level of support and resistance. The scalpers, we need that information as quickly as possible so we can find these levels on the fly and then make an educated trading decision. So what I'm going to do is just go ahead and delete our classic pivots off for today as we focus on camarilla pivots. Now, we need to go ahead and take a look at the key values here on our graph, and those camarilla pivots going to be labeled between R4 all the way down to R1. And these lines are going to help segment our trading strategy. R3 through S3, arguably some of the most important camarilla pivots that we have on the graph. These are going to be denoted as our trading range. Now, again, some of you are looking at range trading strategies with price traversing between support and resistance. And this is where the most of the action is going to happen on our graph. Let me just go ahead and label this out as well. This is going to be a trading range. Here we go. We have our trading range between these 2 points, and we reasonably assume as long as price stays between these values that price will continue to ping between support and resistance. And this is exactly how I came to a decision to trade the euro today after having a bounce off of our key level of support. Seeing price at this juncture, now we want to see price continue to trade between these key values until we have a potential breakout. All right. We can also see a range-based strategy can be non-directional, and that's, again, going back to that question of how do you trade? If I am trading specifically with the trend, that doesn't mean I can't trade my range-based values. Notice if my bias is to buy with a series of higher highs, I can go in, I can begin looking for opportunities to buy off of my lower line. This is going to allow me to trade up towards higher highs in the event that price has made a swing back down, found support, and then jump up towards a higher high. Now, I see some great questions coming in. This is from Forex Gal. Welcome to the program. Happy to have you here. And the first question going to be, the camarilla pivots almost look equidistant like midlines. Good eye there, Forex Girl. You'll know that these lines are indeed equidistant, and that's part of the beauty of trading and scalping with camarilla pivots, because it does have built-in targets and positive risk-reward ratios that we can use along with our potential entries. Let me show you exactly what I mean. We had an entry for the euro dollar again off of our bottom line. This was the area where I was looking for an opportunity to buy the market. Now, if I'm targeting the entirety of the range, and that's where I have my key limit, my take profit order up above at R3, this is going to be my take profit order. Notice if I measure the distance between these two from S3 to R3, that's going to be right in the way of 25 pips. Now, because camarilla pivots is going to be equidistant, if I measure down from S3 to S4, that's going to be half the distance of my trading range, and that's going to come in right at 12.5 to 13 pips. So if I set up my trade, again, buying support in my trading range and looking for a take profit at the top portion of my trading range, that's going to allow me to have a positive risk-reward ratio of 1 to 2 if I set my stop down below support. Let me go ahead and put this out. Here is my ST. I'm using a clear label now so everybody at home can see. And a risk-reward ratio. I don't know if everybody's familiar. I'm taking a little bit of liberty, but I want to pause and explain that. It simply means the number of pips I am risking for my trade and a loss relative to what I make in regards to a profit. At no point do I say to myself, oh, this trade is absolutely going to be a winner. No, we don't know where price is going to go until it has already headed there. Certainly, if anybody in the audience has that crystal ball, feel free to share with me. But instead of that, what you'll notice is we're looking to risk on this position everything below S3 to S4. That's just about 12 to 13 pips, depending on where your entry is, whereas my reward segment going to be right here in the neighborhood of the top of the range in green. That's going to be a value of approximately 25 pips. Now I'm making twice as much when I'm right relative to when I am wrong. And when I'm trading the range, it's going to look something like this. It's going to be 12.5 pips of risk for 25 pips of profit. And if we do this equation out, it's going to come out to 1 to 2. And what that means for me, again, is out of 3 trades, if I'm correct on 1, then I'm potentially break even, if not net positive on my trading account. And I think that's one of the big misconceptions in scalping is that we have to have a high percentage of winners in order to be net profitable on our account. The absolute opposite is true. We can still trade with these values, keep a positive risk-reward ratio, and then go ahead and maximize our profit when we're right. And then when we're wrong, we have no qualms about taking a stop loss because we know one good trade can make up for multiple bad decisions that we have on our account. So taking a look at those risk-reward ratios, regardless if you're trading the trend, if you're trading a breakout or retracement, that's always something that we need to keep in mind. All right, we're just about 15 minutes into our program, ladies and gentlemen. We're talking about trading ranges on the euro dollar, and we're looking at our setup, looking to buy off of our S3 line as price potentially traverses our trading range. Now, if you want to go ahead and change up your risk-reward ratios, I think this is worth mentioning because not everybody's risk tolerances are the same. We can set our stop anywhere between this S3 to S4 values. Why? Well, these are going to be considered our breakout points in the market. And let me go ahead and label that here. We're going to have a breakout point at S4, and we're going to have a breakout point up above at R4. In the event that price moves down to this value, that's where I'm going to say my range is not holding. And I've had enough. My trading idea was incorrect. In the event of a breakout, at no point do I want to be caught trading the range. I want to exit the market as quickly as possible. So we have the ability to move in our stop within this value. You'll notice that the tighter we keep our stops, the better risk-reward ratios we'll have on a particular trade. Conversely, what you'll find is in the event that price wicks down, we'll be the first to exit out of our trades. Whereas if we keep it down at S4, that's going to give us a little more buffer room, but our risk-reward ratios are going to be a little lower. All right, let's go to the boards. Yes, Gigi saying, what is the formula for S4 to R4? Now, there is always someone out there that wants to know the equation for camarilla pivots. Now, I'm right there with you. I want to know exactly what I'm trading. R4 is looking at the closing price of the previous range, then it's adding the high minus the low, and then it's multiplying it by 1.5. And if you're looking for the math, I'll go ahead and cut and paste that into the chat box. This is how we go ahead and take advantage of, you've got it, this is going to be our R4. So take advantage of that, Gigi. A quick Google search will allow you to see the entire calculation. But remember, if anything, if you take it away, camarilla pivots are going to be based off of fractions. And again, this is what's going to create the equidistant lines that we see on the charts. Now, that's just one example of looking for an opportunity to buy off of our S3 range. And what you'll notice here is on our next chart, we have another trading range. This is actually the euro pound. This is another example I set up prior to that ADP announcement. Let me go ahead and highlight our trading range here. It's going to be R3, and we have our S3 line down below. Now, we do have an entry or potential entry here off of S3, but one thing I want to remember is we can trade resistance as well. So if you're looking at a pure range, if you're not using any trend-based analysis, you just want to trade these key points between support and resistance, then we can also look to sell R3. Now, I want to take this time to show you exactly how we could have set up this trade. And we had a nice clean touch of resistance. This came right in the neighborhood of 2 a.m. Now, I know trading going to be a 24-hour business, and not everybody keeps the same hours. Some people work London hours. I have the honor of doing that myself. Some of you may be residing overseas. You may be up in the early morning. Conversely, some of you may be up only during U.S. hours. What's nice is if we're using camarilla pivots, we still have an eye of where we should be trading regardless of the time zone that we were in. Here we have the opportunity to sell R3 again. Just going back and looking at this potential trade setup, we would have looked at a potential sell right in the neighborhood of 83. Our stop going to be above resistance. Remember, this is going to be our breakout point. So in the event that price had popped up over R4, we would have wanted to vacate the market and exit as quickly as possible. From here, if you were looking to sell the range, we would have been able to take advantage of a profit target back down the graph in the neighborhood of S3, and that's going to be 82.81. So this would have allowed us to take a profit of approximately 12 pips while risking, that would have been a profit target of about 24 pips, whereas our risk would have been approximately 12 on this particular trade using a 1-to-2 risk-reward ratio. Now, we see after the ADP announcement, we have a long wick showing support. If you're trading the range, we can look to inverse this trading back up to the top of resistance. Again, using a range-based style, not discriminating for the trend, we can do something like this. Buy S3, right in the neighborhood of 82, our limit back up to our previous sell point at 83.05, and our stop down below. All right, great questions, great concerns. I do see some questions in regards to time frames. Certainly don't mind taking those. Time frames are very important when you are trading because it's going to determine how many bars you see on the graph. Personally, if you look at my examples, I tend to defer to either a 30-minute or 5-minute chart when scalping. But what's great about camarilla pivots is, regardless of the time frame that you're trading, they're still going to be in the same location because they're based off of yesterday's trend. If I was looking at an opportunity to sell resistance at 83.05, I could do that on my 30-minute bar. You could see that we still went up. We touched resistance. We had a long wick, and we had the opportunity to sell. If I go ahead and pull this out to a 2-hour graph, we still had a long wick and opportunity to sell resistance. I can go ahead and pull this back even further to a 4-hour. We'll see resistance is still resistance, and we still have the same trade setups as somebody that was on a 5-minute chart. If I go ahead and put this on a 5-minute chart, all we have is more bars at our disposal. You'll see our selling point going to be in the same neighborhood as somebody that traded a longer-term graph. Now, the caveat is if you're using a shorter-term graph, odds are you're probably using another oscillator or indicator to confirm your trade. And that is absolutely something that you can do. One of my favorites is going to be the CSCI indicator. Now, I don't want to get bogged down in indicator chat today, at least not ones that don't pertain to camarilla pivot. But let me show you a quick example. Let's say we had price move up to resistance, as we did. We are a range trader on our 5-minute chart. We want to look for an example to sell. I can pair this up with a camarilla pivot and an oscillator. When I have my oscillator start to move back down from that oversold territory, that can show me an opportune time to enter into the market. So the only reason I would adjust these time frames is primarily if I wanted to use another indicator for entry. But truth be told, somebody trading on the 5, somebody trading on the 30, or even a 2-hour chart could come to the same day trading decision. And that's one of the reasons why I absolutely love trading with these camarilla pivots. All right, great questions across the board. Looking down at the clock, time absolutely flying. Just about halfway through our presentation, ladies and gentlemen, which means I'm going to switch gears. Certainly, if you have any questions about trading the range, feel free to get those questions in. I will continue to take those as time allows. Now, I want to get to the good stuff about breakouts. We talked about R3 and S3 being our trading range. But what about these other points here out on our graph? These are the extremities in price where we should be getting a lot of attention or credence to particular momentum at these points. This is going to be a resistance line, and this is going to be a key line of support. If I have a breakout of resistance in an uptrend, that can be a great signal to go ahead and buy with the direction of the trend. I like to think of this as the camarilla line of last resort. If price exceeds this value, again, it's a big red flag to me as a trader that we're having big news. Something is pushing price to an extreme because now, remember, going back to that calculation for R4, we're looking at exceeding 1.5 times the distance of our previous day's trading range. From here, we can trade a straightforward breakout strategy. Happens to be one of my favorites. What we can do is trade a break, and in a uptrend, we want to buy a breakout. That breakout is going to happen above R4. I can trade this with entry orders. I can set an entry above R4. In the event that you were asleep during that Kiwi news last night that pushed the pair, the Aussie Kiwi, up towards higher highs, this way you would be entered into the market even if you were away from your computer. Better yet, if you're in front of your computer, you can trade on a confirming bar. We have a large bullish engulfing candle moving over R4, allowing us to have a little bit of confirmation on our trade. Regardless, I think we can all agree price is breaking out towards a higher high. So I want to look for an opportunity to buy over this key area of resistance. From here, now I have to complete my trade setup, right? I need to have a profit target as well as a stop on our trade. No trade that we'll take will never not have a stop. Again, we always want to make sure that we have our risk in check. And Cam Pivots does it again with our equidistant lines. If price goes back inside of our trading range, and I'm trading a breakout, that's going to be a key sign to me that this was a false breakout in the marketplace. This is where I'll cry uncle and say enough is enough. I no longer want to be trading a breakout. Just get me out of there. So I buy a break above. Let's say, again, price drops back down, moves into our pivot range. I want to exit the market as quickly as possible. Let's measure the distance between the two, shall we? We'll find that the distance is going to be just about 20 pips, which means the distance that we can use for a positive risk-reward ratio is going to be 40. There we have it on our graph. That would have put our potential profit target right here in the neighborhood of 107.75. I'll go ahead and type this out, and this is going to be my limit. Now, many of you may be out there saying there is still a lot of price left on the graph moving up towards higher highs. This is where you can take camarilla pivots and work it into your own personal strategy. Many traders won't trade breakouts unless they can get a 1-to-4 risk ratio, a 1-to-3 or better. So this is just a guideline. And once you go ahead and get a feel for these key levels, then you can apply it in an active strategy of your choosing. This just makes it very easy for us to interpret the lines that we should be trading around on a daily basis. All right, let's go into a question from Jimmy saying, are you using price action 2 for confirmation? You can, Jimmy, absolutely. This is where, if you want some confirmation on your breakout, maybe you want to wait for a close above our R4 line. Now, this is what's going to happen. If I'm trading a breakout entry and I have it right over our line, I'm going to get a better entry by about 8 pips here, but I would be the first one in a trade in the event of a false breakout. Whereas if I wait for a 30-minute candle close, that's going to put my entry here right in the neighborhood of 107.40. Now, that big bullish engulfing candle, again, gives me the confirmation of a upside breakout. But that would put my buy order a little further away. What happens is if you wait for confirmation or confirming tool, then you have to adjust your risk-reward ratios accordingly. Because now if I measure from the high of this candle down to my stop, that's only going to be about 28 pips from entry, and now I'm only looking at approximately a 28 pip limit, putting me at a 1-to-1 risk-reward ratio. So if that's the case, if you get in the market a little further away from the R4 line if you'd like, you can either hike up your stop to make up for that risk-reward ratio, or you can push out your limit. So there's pros and cons for each, and make sure that you're aware of them. If you wait for confirmation, you may get in a little further away from the market, and you would have to extend your risk-reward ratios. Whereas if you take a straight entry order above price, you'll be the first one in the market, but first one in, generally the first one out. In the event of a false breakout, you're going to be the first one stopped out of your position. All right. Great question there, Jimmy. Happy to have you here on the program. We're just about 30 minutes past the hour, 15 minutes remaining in our program. Make sure you get out all of those questions and concerns. I still have some great examples here to show you. I want to go ahead and switch gears now to another breakout, and this is going to be to the downside. This is the inverse breakout that we see under S4. Let me go ahead and highlight this. This is going to be our Kiwi dollar chart, and this is going to be a support breakout. What I'm looking for is price to go ahead and settle underneath this line. The Kiwi dollar turning on a dime due to news last night, and breakout traders certainly had the ability to take advantage of this. Once price goes ahead and moves down, we can have our entry underneath this value. And this speaks to confirmation here. You can see that we had our entry, our first entry, right at 2100 Eastern Time. If I had an entry order, I would have been put in the market here, whereas we saw price retrace before finally breaking out. The better entry would have been later. Again, it's all going to depend if you want more confirmation or whether you just want to get into the market. Both have its benefits, but I think in the end we would have had our entry right under this round 86 flat figure. That's going to be our S4, and that's the price that I think we can all go ahead and agree on was our pricing floor. Remember at the top of the hour where I said support like the floor underneath our feet, that floor was to collapse. Well, I'm on the 6th floor. I may find myself at somebody else's office on the 5th. It's exactly what we saw with the Kiwi dollar price beginning to descend towards lower lows. This allowed me an excellent opportunity to trade with the trend. Let's go ahead and set it up and show this example, shall we? My stop would have been right over the top of S3, again inside of my trading range. If price resides inside of the trading range, at no point should I be considering trading a breakout. That's my threshold. I'm a breakout trader. I don't want to trade the range. If price is in the range, I have no business looking at price going down. Now, we see we have the confirmation. We have our entry. We can extrapolate our profit targets. This is the good stuff, right? Everybody wants to take a profit, if possible, by measuring twice the distance of our stop. Let's take a look. We'll see our stop from entry just about 17.5 to 18 pips. That means my trading range is going to be 36 in value. Again, Cam Pivot's doing all the hard and heavy lifting for me with that equidistant price setup. From here, I can extrapolate 36 pips down the graph, and that would have put my limit right near the low in the neighborhood of 85.63. So we can trade breakouts on either side. We can trade a break of resistance to the top side. We can trade a breakout of support to the downside in the event the price breaks out towards a lower low. From here, the setups are all fairly straightforward, and you can trade virtually any currency pair. It just depends on your preference. Do you only want to trade with the trend? Do you want to trade the range between support and resistance? Or do you want to go ahead and look for those breakouts? All right, those are going to be our camarilla pivot points, ladies and gentlemen. Still plenty of time on the clock. I want to dedicate that to your questions and concerns. Let's go to the boards. This is going to be from Jimmy saying you're only trading the range between S3 to R3. That's absolutely correct. These are going to be considered our trading range between these 2 points. And let me go ahead and highlight that again. I'll add another label. These are going to be my trading range pivots. And as long as price stays between these values, I want to see it continue to ping between those key levels of support and resistance. In the event that we start to see price move back through those values, then that could be a potential breakout. And I do have another example. This is going to be on the Aussie dollar. Let me go ahead and cue this up. This was a great ranging setup. You'll see price staying between the hash marks, if you will, between S3 and R3. This is going to be our trading range at work. If you're range trading indiscriminately without any trend-based bias, you can simply buy support. You can look to sell resistance and continue the process until price breaks out one direction or the other. But to answer your question, yes, we're only range trading between those key values, S3 and R3. And be very aware that at some point in time, this range will come to an end. Price will break out. Just as we saw in our Kiwi pairs, news will happen. Something will shake the marketplace and this range will come to an end. Or, hey, maybe we successfully range trade all day, and at 5 p.m. we get a new set of lines to change our bias on our currency pairs. So make sure you're always using a stop with your trading. And those are going to be with the R4 lines, going to show us the extremes in price, because there, if prices hit our S4 or R4 lines, that's going to be a potential breakout. And then I want to go ahead and exit the market. All right, Jimmy says, so price has to hit those levels. Yes, I want to buy inside of the range as close to support as possible, and I want to sell as close to resistance as absolutely possible. Now, does it actually have to hit? That's going to come back to the confirmation conversation. If you want to, absolutely, you can be a stickler for price and say it has to touch. And normally, I'll go ahead and set entries on these values, or if I'm trading with an oscillator, I'll just make sure I have a return from overbought or oversold at those key levels. And that's exactly what we had here. We had price move up on the Aussie dollar. CCI went to my overbought level. Momentum turned back down, allowing us a key opportunity to sell. All right, let's go in. This is going to be a question from Forex Gal saying, hey, so the bias is not an issue here for range trading with pivot points. My answer is range traders as a whole don't have a bias because they are expecting price to go ahead and stay sideways for as long as possible. Now, if I scroll back on the Aussie dollar, we can see that the trend is well to the upside, which means you can still trade the range, but only in the direction of the trend. So maybe you opt to take only the buy positions back with the broader trend. That means you're a trend trader. You fall into category 3 that we discussed at the start of our conversation. Conversely, if I'm a pure range trader, I'm just looking at today's price action, and I will trade between these levels until they come to an end. Is one right? Is one wrong? The answer is absolutely no. It comes down to personal preference. And truth be told, if I'm trading a range and I'm using a 1-to-2 risk-reward ratio, I may get in 1 or 2 good trades before a breakout that I get stopped out. But that's okay, because I know I only need to be correct 1 out of 3 trades from our risk-reward conversation to be break-even, if not net profitable on my account. And that's what it's all about. So you can trade the trend even using the interior cam pivots. All right, long distance high five there, Forex Gal, bringing the great questions. This one going to be another question saying, what daily rollover time are you using? New York close, London open. Now, Walt's asking about rollover. At Fxcm, rollover is going to be accrued at 5 p.m. Eastern Standard Time. Now, as a scalper, I fully intend to close out the majority of my trades prior to rollover. That doesn't mean that that always happens. There's always going to be an exception to the rule. And if that's the case, rollover is accrued at 5 p.m. And just depending if we're long or short our favorite currency pairs, we may earn or we may even go ahead and pay rollover at that time. Personally, once I set up a trade setup for good, for bad, for ugly, or anything in between, I want to see that trade idea play out in the marketplace. I'll either hit my stop or I'll go ahead and hit my take profit level. All right, great question there, Walt. Happy to have you here on the program. All right, this is going to be a question from, about risk reward saying 1 out of 3. Don't you mean 1 out of 2 trades? No, I actually mean 1 out of 3. Let's go ahead and look at our ratios again. This is going to be 1 unit of risk for 2 units of profit. If we go ahead and add these up, 1 unit of risk for 2 units of profit, that actually comes out to a total of 3. So let's look at it. If I lose 2, all right, let's say I lose 2 trades, that means I'd be at -2, correct? And if I won 1, let's go ahead and say winner is 1. That means I would have won +2. So look at it as a 3-trade level here. If I lose 2 and win 1, now at -2 and +2, that puts me virtually break even, all things considered, on my account. So when I say 1 to 2, it's actually referring to 3 positions. It means I only need to be 33% accurate to be break even, if not net profitable on my account. Now, Darren says, are cam pivots freely available, or do you have to pay for them? At Fxcm, these are going to be standardly inputted inside of MarketScope 2.0. Now, I know many of you trading with different brokers and have different charting packages. I know they can be loaded into MT4, but these are pretty common. I'd say the majority of the pivot points available, whether it's going to be Woody Classic or Camarilla, should be available for your disposal. So make sure you go ahead and check that out. Again, it's defaulted here inside of MarketScope 2.0 at Fxcm. Never hurts to ask. Go ahead and find out. Camarilla Pivot's a great tool that we can all take advantage of. Let's go back to the boards. Plenty of time on the clock. Just about 5 minutes remaining. I see a call to take a look at the dollar yen. Absolutely, the USD JPY. Now that we're familiar with our strategy, we can pull up the graph and take a look at the dollar yen. Here we see a strong trend to the upside. So if you're our trend traders, what you want to do is look for a breakout. This is going to be over the R4 level. Once you're familiarized with the camp pivots, you can set up these trades very easily. That means we want to trade a breakout above resistance. Here we go. That is going to be for our trend traders. Also, if you have a trend-based bias, you may want to buy range support. These are going to be our two trend bias trades. If you're a range trader, you may have had the opportunity to sell R3. Again, not taking into the account the bias of directional price, just looking for the ping between those key levels of support and resistance. As of present market price, we're right smack in the middle of that trading range. So this is going to be one of those charts where we're just going to have to wait and see. And I know from your conversations with the other presenters here on FX Street, they've talked about being patient in the marketplace. So by no means should we think that Camarilla pivots are going to be a magic bullet. We need to go ahead and be patient, take a look at the graph, and then, and only then, when all the parameters for my trading are correct, then I want to go ahead and enter into the market and execute my trading plan. All right, let's go in and take a look at another question from Jimmy saying, can you have a look at pound dollar? Is it touching R3? Would you enter? Let's go in and take a look at the GBP USD. Now, this is going to be one of those charts where we can see price inside of the trading range. But because it attempted to break out earlier, this is actually one that I tend to avoid. This is one of those extra rules that we can apply to our personal trading. Because it attempted to break out and failed, and we had such a high push up in the early morning, I'm not going to sell right here on our S3 value, or excuse me, our R3 value. But you're right, it is going to be turning potentially at this point. This is one of, if you have a trend-based bias to the downside, you may look for an opportunity to sell. But we're now breaching back into, yes, you've got it, our trading range. But since it went ahead and attempted to break out, I don't want to be fading that at present, so I'm going to avoid any opportunity inside of the trading range today. Great questions, great concerns all the way around. I see we have 1 or 2 minutes here on our program. If our moderators will allow, I just want to go ahead and do a little self-plug here. I know it's a little self-serving, but if you like the analysis and the style of trading that you've seen here today, I want you to know that you can join me inside of Daily FX Plus. We have live webinars going on throughout the day, and I hold the scalping presentation every Wednesday, and that is going to be bright and early at 7 o'clock Eastern Time. Now, these presentations are going to be available for all of our account holders, but if you're interested, you can take a trial subscription for $19.99. So make sure to check that out. You'll also have access to sentiment from Fxcm as well as our trading signals and other tools. So if you're interested, go ahead and check out the link there. Also, if you have any questions about today's material, I want you to be able to get in touch with me. I'm very accessible throughout the trading day. You can always tweet with me at WEnglandFX. As well, you can always email me directly. This is at Instructor@dailyfx.com. Ladies and gentlemen, it has been an absolute blast being your host, moderator, and guide here on FX Street. I look forward to coming back and presenting again soon. Mod, thank you for inviting me here today, and I hope you enjoy the rest of the scalping session. It's been my pleasure, and I hope that we get to speak again soon. Guys, have a good one.